Aravanco wants to allow the possibility of non-compliance with the laws and regulations during the course of audit of ASRC Limited and seek guidance to identifying the indication of non-compliance law regulation. SA 250, SA 250, considering law and regulations and data financial statement. So when you find any regulation law, first what you're going to do is it's not the responsibility of the auditor to find. It's the responsibility of the management and those who charge to governance to maintain the books of account and the financials and as per the laws and regulations. If there is any it's not been followed or it's been over overstated or understated or any violation in the law, you can report it to those charged with those charged with governance and they must take the action. If they didn't take the action, you can escalate the matter in the report and qualify the opinion, or you can withdraw from the engagement if based on the pervasive nature of the lapse, lapse in the judgment or lapse in the following of the law. Is it to considering law and regulations and audit of financial statement? The auditor shall perform the audit procedure to identify instance of non-compliance with law and regulations, which may be material effect of financial statement by inquiring into management and by appropriate those charged with governance as whether the entity is compliant with any laws and regulations and inspect the correspondence. If any of the relevant licensing or regulatory authorities for the following indicator investigation by the regulatory organization, government department, payment of fines and payment of penalties, payment of unspecified services or loans to consultant related parties, employees or government employees, purchase at a price significantly above or below the marketplace, unusual payments to legal retainership fees, unusual payment in cash. These are the things that which indicate that there is an violation in law and regulation. Is it appropriate for the auditor to make an inquiry and the management regarding the management's own assessment, the risk of fraud and control in the place of prevent and detect discussion? Who is the responsible? It is a responsible SC 240 report responsibility relating to fraud in the auditor financial statements. So responsibility of the management to discover the fraud and prevent the fraud and prevent some misstatements. But if that escalates when the auditor finds out it, you need to report to the management. If they correct the misstatement, no issue. If not, you need to report to the management. And if the fraud amount is much higher, we need to report to the specific authority within the due time. And we need to remove ourselves, rescue ourselves from this engagement, retire from the time, create a vacancy in the office of this position, and remove ourselves from this kind of engagement. SA 240, the auditor responsibility relating to fraud and auditor SA 240, responsibility relating to fraud and audit of financial statement. Financial statement, balance sheet, P&L. The management accepts the responsibility of the entity's internal control and the preparation of entity's financial statements. Accordingly, it is appropriate for the auditors to make sure this inquiries with the management regarding the management's own assessment of the risk and fraud and control the place of prevent and detect it. The nature and extent of frequency of the management assessment and such a risk and control may vary from entity to entity. Auditor shall make inquiries of the management regarding the management assessment to risk of financial statement may be materially misstated due to fraud and including nature and extent of frequency of the assessment. Management pauses to identify and response to the risk of the fraud and entity, including specific risk of fraud the management has identified or that has been brought to its attention. A clause of transaction and disclosure in the risk and fraud are likely to exist. Management communication. If any of the charges governance regarding the process of identifying and responses to the risk of fraud and entity. Management communication. If any employees regarding to its views of business practices and ethical behavior. Explain the briefly duties and responsibility of auditor in case of material misstatement resulting from management fraud. SA 240, what relation to auditor responsibility relating to fraud in an audit of financial statement. And SA 250, reporting those communicating to those charged with the governance, SA 6260. Sometime. Not only this, if you find something, find any or fraud during the audit, you need to change your audit scopes. You need to change your sample, increase sample size to find more audits. When you find any misstatement during the audit in any area, as per the plan, you're going through it, but as of your plan, you're able to find some misstatement. Should increase your audit samples to see is there more fraud. Yeah, you should adjust your audit assessment. Risk assessment procedure you need to change. Duties and responsibility of auditor in case of material misstatement resulting from management fraud. The misstatement in the financial statement is can be arise from the fraud error. The term fraud refers to intentional act and one or more individual among the management those charged with governance. Auditor is concerned with the fraudulent act those causes material misstatement and fraudulent statement. Fraud involves one or more members of the management those charged with governance and refer to the management fraud. The primary responsibility of prevention and detection of fraud rests with those charged with governance and management of the entity. And they even do the fraud, now how to do? Various standard of auditing state the requirement of auditors to consider risk of fraud in audit of financial statement, institute and manner of dealing with the same. Para 27 of SA 315, identifying assessing the risk of material misstatement through the uncertain understanding the entity and environment. After understanding the environment and the entity, you need to identify and assess the risk of material misstatement. So requires the auditor to consider the risk of the fraud in determining whether the risk is significant risk, control risk, management risk, fraud risk, identification risk, material risk, everything is there. Para 22 and 23 of SUA 250 considering laws and regulation in our audit of financial statement requires that auditor internally in communicating those charged with governance, audit and committee and board of directors when there is a non-compliance with law and regulation that comes to auditor attention during the course of audit, which is believed that intention and material without any delay. Believe it's intentional and it is material, then without any delay. If they found something, it's material, they need to report it. SA2 of the auditor responsibility relating to fraud and audit of financial statement internally as states the following. Paragraph 5. Auditor conducting audit according to standard of auditing. Responsible for obtaining reasonable assurance that the financial statements are whole or free from material misstatement, whether caused due to fraud or error. Owing to the inherent limitation of audit, there is an unavoidable risk that some material misstatement of the financial statement may not be detected, even though audit are properly planned and performed in accordance with standard of auditing. Para 40. If the auditors identify a fraud as obtained, the information that is indicates the fraud can exist. Auditors shall communicate those matter timely basis on the appropriate level of management in order to inform those primary responsibility and prevention reduction of fraud, the matter relevant to the responsibility. If an auditor has identified suspect of fraud, auditor shall determine whether there is a responsibility to report the occurrence and suspension to the party outside the entity. Although the auditor's professional duty to maintain the confidentiality of the client and inform any procedure may reporting, auditor's legal responsibility may override the auditor's confidentiality in some circumstances. Para 866, in some cases, the requirement of the reporting of fraud, which not discovered to audit process, may be subject to specific provision of the audit mandate or related legislation or regulations. Further, Section 143 of Companies Act, if an auditor of the company in the course of performance of the duty as an auditor has a reason to believe that the offences involves fraud is bringing in being or has been committed against the company by the officers and by the employees of the company, he shall immediately report the matter to central government. In the case of amount of fraud is 1 crore above, or audit committee or board as or other cases. In the case of amount of fraud involves less than 1 crore within such time, such manner prescribed. Under the Rule 13 of the Companies Audit on Auditor Rules 2014, notwithstanding anything contained in the section, If auditor of the company in the course and performance of the duties of auditor has reason to believe that offences of fraud involve such amount may be prescribed, being committed by the company by the officers and employees of the auditor shall report the matter of the central government within which time such a manner may be prescribed, provided that in the case fraud involves lesser than the specified amount, that is 1 crore. Auditor shall report the matter in the audit committee constituted under the section 177 of the board or to the board as the case may be, such time and such manner as may be prescribed. Provided further, the company whose auditor has reported fraud subsection in the audit committee, the board did not report to central government, shall discover the details along with the fraud in the board and the report in such manner as may be prescribed. Time and manner of reporting the prescribed rule 13. If an auditor of the company in the course and performance of the duty of a statutory auditor has a reason to believe that offences are fraud which is involved expected to involve individually amount of 1 crore or above being or has been committed against the company by its officer or employee, auditor shall report the matter to central government. Auditor shall report the matter to central government under the auditor shall report the matter to the board or the audit committee as the case may be immediately but not other than 2 days. 2 days in the knowledge of the fraud, seeking their reply for observation for 45 days. On the receipt of the reply or observation, the auditor shall forward this report and the reply or observation of the board and the audit committee along with the comments as such reply and observation of the board and audit committee to central government within 15 days from the date of receipt of the reply observation, whatever may be the amount of fraud. In the case of fraud, a auditor failed to get any reply or any observation from the board or the audit committee within the stipulated period of 45 days. Case shall be forwarded his report to central government along with the note containing the details of the report that the earlier forwarded to the board and the date audit committee of which has not received any reply observation. The auditor shall send to the secretary the Ministry of Corporate Affairs in a sealed cover by registered post with acknowledgement due or by speed post followed by the email in confirmation of the same. The report shall be the letterhead of the auditor containing the postal address, email address, and contact phone, mobile telephone number or mobile number, and be signed by the auditor with the seal and the same indicating membership number. Auditor shall be in the form and statement as specified in the REDT 4. In the case of fraud involved amount more than 1 crore, that is, the auditor shall report the matter to audit committee constituted section 177 of the board immediately, but not less than 2 days. And knowledge of the fraud and shall be report this matter specifically follow. Nature of the fraud prescribed, appropriate amount received, and parties involved. The following details of such each of this fraud reported by the audit committee of the board and the subsidiary through during the year shall be disclosed in the audit report. Nature of fraud with the description, appropriate amount involved, parties involved, and remedial action to be taken, and remedial action taken. So nature of fraud, approximate amount, what is the amount involved, who are the parties involved, and what is the remedial action taken. And provide the provision of this rule shall be applied and mutatis new and this in a cost auditor and secretary auditor during the performance of the duties in section 140 and 204 respectively. Auditor also required to report this clause 11 of para 3 of CARO report. Whether any fraud by the company or any fraud by the company or any fraud by the company or any fraud on the company has been noticed or reported during the year if it has a nature and the amount involved and previously who are the involved, what is the resolution for caught and there. Whether any report under the section 143 subsection 12 of the Companies Act has been filed by the auditor of 184 and prescribed under the rule 13 of companies audit and rules 14 in the company's central government. Whether the auditor has considered whistleblower complaint if any of the received during the year of the company. As per the para 4 of the CARO 2020, the auditors report the answer to any of the questions referred to para 3 of the unfavorable qualified. Auditor report shall also state the basis of the unfavorable and qualified answer as the case may be. When the auditor is unable to express an opinion on the specified matter, the report shall indicate any fact together with the reason as to why and possible to him to give an opinion on the same. Okay. In the course of the audit of Quick Limited, you suspect that the management has made misstatement in the financial statement SA 240 audit responsibility regarding to fraud in then financial statement and the intention to deceive the user and to scumber the pressure to meet the market expectation. Escalate how the fraudulent financial report shall be accumulated and also discuss the techniques to combating fraud by the management over at the control. In the given case, management of Quick Limited has an intention of misstatement to deceive the user in order to meet the market expectation. Auditor suspected such intentional behavior of the management and the situation. SA 240 discuss how fraudulent intentional financial reporting shall be accomplished and also discuss the techniques of committing fraud in the management overriding control. SA 240 auditors responsibility related to fraud on audit of financial statement. Fraudulent financial reporting may be accumulated by the following: manipulating, falsification, alteration of accounting records, supporting the documents from which the financial statements are prepared. The misrepresentation of intentional omission from financial statement and event or transaction are significant information. Intentional misapplication of accounting principle relating to amounts and classification, nature of presentation, disclosure. The fraudulent financial reporting often involves management override of control and otherwise any appear to operate effectively. Fraud can be committed by the management overriding the controls using a technique or recording the fictitious journal entries and particular year close to the end of the accounting period. So increase the sale, manipulate the operating results and achieve other objective. Increase the sale and then after reducing the sale by sales return. Inappropriate adjudicating assumption, the charge and judgment using the estimate of accounting balances. Omitting, advance, delaying recognition of financial statement, event, and transaction that has been occurred during the reporting period. Cancellation or non-disclosure fact that would affect the amount recorded in the financial statement. Engaging complex transaction that is structured to misrepresent the financial position or financial performance of the entity. Altering the records at terms used in significant unusual transactions. G Limited is a mobile phone operating company. Being a market function has outsourced the entire operations like maintenance and mobile infrastructure, customer billing, payroll, accounting functions, and asks the auditor of G Limited to how it can obtain an understanding of G Limited and the service of the outsourcing agency. So, SE2 not to audit consideration relating to entity using the service organization. ISA4 not to audit consideration relating to entity using the work of service organization. Audit consideration relating to entity using the server using the service of using a service organization. Okay, the entity user auditor shall obtain an understanding of how the user entity uses the service organization. So in this case, what they are using for outsourcing such activities. What mobile infrastructure maintenance, customer billing, payroll, accounting functions. So, which shall include the understanding of nature of service, nature of materiality, degree of interaction between activity of the service organization and those of user entity, nature of the relationship between the user entity and the service organization, including relevant contractual term, what is the contract there, and the activities undertaken by the service organization. The nature of service provided by service organization and the significance of such service to the how it is so important, and including the effect on the internal control of the entity. How is the internal control of the service organization? Nature of the materiality of the transaction processed on account of this financial reporting process affected by the service organization. How service organizations are using that's all thing. Mr. Honest Limited has entered into the transaction on the 4th March 2013 year end whereby agreed to pay 5 lakhs per month through Y on annual retainership fees for the engineering consultant. No amount has been actually paid, but it still actually provided the books of account on the 31st March. Amount has not been, but retainership fees there. You encourage the elicits to response that a need-based consultation is happening around the year. There is no documentary or other evidence to receipt of service. As the auditor of Mr. Honest Limited, what you do approach? SA 240, auditor responsibility to fraud of an audit of financial statements. Relating to any fraud is committed by the management, overriding the control, such as techniques and report according to fictitious journal entries, particular close to the end of the accounting period to manipulate the operating results to achieve its objective. According to the auditor, should adopt the following approach. If an result of misstatement resulting from a fraud of a suspected fraud, the auditor encounters some exception circumstances that brings into the question of auditor's ability to contribute performance in audit and auditors are also consider whether the appropriate to withdraw from the engagement or whether withdraw from the engagement in a legally permitted. Determine the professional legal responsibility in the circumstances, including whether there is a relation to the auditor's respect to the person or persons who make audit appointment in some cases. If the auditor withdraws, discuss the appropriate level of management and those charged with the governance and auditor withdraw from the engagement and reason for the withdrawal. Determine whether there is a professional legal requirement to report to those persons and persons to whom the audit appointment or some cases require regulatory authority or auditor withdrawal of some engagement and reason for such withdrawal. So some withdrawal, no, what is the reason? There is some amount was paid and we found that as per the Satuwati, there is a fraud in the financial statement, auditor responsibility for it. So we are drawing from it. We have informed the management. That's all. Reporting under Companies Act. I say Section 143(12) of the Companies Act had a rule with read with the Rule 13 of Companies Audit and Auditors Rule 2014 requires the auditor of the company in the course of performance of duties of the auditor as a reason to believe that the offences involves fraud is being has been committed against the company's an officer or employee of the company. He shall be immediately report the matter to the audit committee within 2 days of his knowledge. And as amount involves less than 1 crore, more than 1 crore, report to central government directly. Mention the following nature of the fraud in describe approximate amount of involved, who are the parties involved. Reporting under the CARA 2000, CARO 2020. The auditor shall require to report in the clause 11 of the para 3 of the CARO 2020 if there is any fraud or by the company has been noticed during the year. In the course of the audit of K Limited, if the auditor again observed that there is a special audit conducted in other instances of management on a possible suspicion of fraud and requested a copy of the report to enable him to report on the fraud aspects. Despite any reminder, it has not been provided. In absence of the special audit report, Mr. Yen insisted that it is being provided with at least written representation in respect of the fraud on the company. For the request, also the management remains silent. Please guide Mr. Yen. So, some audit has been happened in the audit company, but the management is not ready to share the report with you. So, what can you do? So in this instances, it clearly says the auditor is hiding the fraud under the books of financial statement. So the auditor responsibility relating to fraud in the financial statement. That is SA 240. And the audit 240. What you should do, you should report it to manner. There is some fraud, you are not reporting your document. Mm. So it does not give responsibility for the auditor to discover any kind of fraud or error rather than indicate that should be the responsible auditor specifically when any fraud or error is discovered or any symptoms of any fraud or error is discovered. If due such extensive audit procedure, if any audit, any fraud is discovered, then you should ask the management. It may necessary changes in the financial statement. Otherwise, auditors entitled to use and qualified report. Present case, Mr. Yan, auditor observed that there is an official audit conducted in instance of management and the possible suspicion of fraud and request a copy of the report and enable him to report on fraud. Despite many reminder, it is not provided and they also not provide at least a written representation respect to fraud on the company. Management became silent. Therefore, the auditor is unable to obtain audit evidence. They should consider the possible impact that financial information or effect on the report, or it may be quantifiable that such a fact should be disclosed in the report. Section 143(12) of the Amendment of Companies Amendment Act. Notwithstanding anything contained in the section, it is an auditor, if an auditor of the company in the course of the performance of the duty as an auditor has reason to believe that the offense of fraud involves an amount of rupees 1 crore or more being committed by the company by its officer or employee, the auditor shall report the matter to central government within such a time as a manner prescribed by the Rule 13(2) of the Companies Act 2 days. Provided in the case of fraud involves a lesser amount of the specified amount, auditor shall report the matter to the audit committee constituted in section 177 of the board on the case where within the time such a manner prescribed 45 days you need to wait. And the Rule 13 of the companies and provided that the company's auditor has reported the fraud under the subsection audit committee and the board does not report the gives and reported or respond to it or they given the report, they should forward to central government after the 45th day and disclose the detail about such a fraud, what you have committed, what you have found, when you have found, when you have reported to the management, how many days you have waited, is there any communication between them, and 45 days, is there any reply received? If not received, you are in this date, you are giving self-attested, get a copy, sent through speed post, and speed post and email for acknowledgement for the mail. Big and Small Limited received a show cause notice in December 2013 from the Excise Department intention to leave a sum of 25 lakhs. Company replied to the above notice of January 2014, contended that it is not liable for the proposed levy. No further action was intended by the Central Excise Department upon finalizing the audit on 31st March. As auditor of the company, how would you deal with the matter? So, show cause notice received was sum of 25 lakhs, but company replied the above notice that is not liable for the proposed. So you should see materiality, how it's consideration of law and regulation, audit of financial statement. And you should see is that the case instances and what is there actually reply made by the management is fair. It is as per the rules and regulation and supporting evidence provided by the management regarding the case. And you should call upon an expert to deal with the things and whether and you get an opinion from that whether this matter is can be was what the management says is true and 25 lakhs need not to be considered as an contingent liability. You can move on. If you've been sure, you can do. If not, you get an adverse opinion. You give an qualified opinion. You get any adverse report regarding the action of the management. So, as per the SA 250, consideration of laws and regulation of audit financial statement, the auditor shall obtain sufficient appropriate audit evidence regarding the complaints with the provision of law and regulation relating to recognition, recognized to have direct effect on the determination of material amounts to disclose in this financial statement, including tax and labor laws. During the audit, auditor shall remain allowed to the possible that other audit procedures are applied and may bring instances of non-compliance with suspect of non-compliance with laws and regulations auditor attention. In order to discuss the matter with the management where appropriate those charged with governance, if the management has appropriate those charged with governance do not provide sufficient information supporting the entity in compliance with the laws and regulation, in the auditor judgment, the effect of the suspected non-compliance may be material to the financial statement. Auditor shall consider the need to obtain legal advice. In this case, conclude a non-compliance of material effect. The financial statement has not adequately reflected financial statements. Auditor shall express and qualify adverse opinion in the financial statements. Again, in the India and AS 29 provision for contingent liability, contingent assets, future events may affect the amount required to settle the obligation should be reflected in the amount of the provision where there is a sufficient provide evidence that is event would be occurs. Present case. Issuance of show cause notice to Excise Department does not tantamount the demand payable to company. And so far as the company has a reply to the notice and no further correspondence was received from the department, the show cause notice may be allowed and indicate a non-compliance for the auditor. So the auditor need to discuss with management and apply additional procedure. If the auditor conclude there is no complaints, then provision for the same should be made as per AS 29. If the management does not accept the request, auditor should qualify the audit report according to the vice versa. So P Limited is a listed company, and its company's activities are divided into three regions. Company appointed PQ and Y Limited, KL Limited, MK Limited, chartered accountants to conduct a joint audit and report the financial statements for the financial year 14-15. Explain the relation among joint auditors and the audit of the financial statement in the financial joint audit. You say 299. Hmm? Joint audit. Joint auditor responsible for their own report. If they give a combined opinion, everyone is responsible. But the part which is being allocated to the joint auditor, they are solely responsible for the audit, what they did on that part. In the overall opinion, everyone is responsible. If everyone gives an unqualified opinion, then good, everyone is responsible for the whole report. If someone is able to give a qualified opinion, they can give a separate report stating so why they are giving a qualified opinion. Another person why they are giving a qualified unqualified opinion. That's it. And engagement partner and other key members of the engagement team for each of the joint auditor shall be involved in planning of the audit. Joint auditors should jointly establish an overall audit strategy that sets the scope, timing, and direction of the audit. The guide of the development audit. Prior to the commitment of the audit, the joint auditor shall discuss the development audit plan. The audit plan, risk assessment, and allocation of work. What is this now? The host prime these joint audits will combine themselves and they say I'm expert in this area, so I will take this area. They will allocate their work, and on that work they will say we will see this audit in this day within the duration of the audit plan time. This day we will be report this instances, and they will get the report, audit, collect the audit evidence, and they will share it among themselves. They will acknowledge their work, and if any differences arise in their work, they will resolve the issues. They will document their work and document their process, and they will document the conclusion what they got. At the same time, they will prepare and consolidate report combined of their audit working papers. They will prepare an audit report, and each of the auditors, joint auditors who signed the who done the audit will sign the report. Every joint auditor will sign the report combinedly in audit report. Then they will give an opinion and they will say what are the area they have audited, what they left out, why they left out, everything they will mention about, and what are the conclusion they drawn. All their observation will be given in the matter paragraphs. If they want to give emphasis matter, they will give emphasis other matter paragraph. Their auditor, in which auditor what they given, it's not necessary. If you want to give separately, they can give separately. If not combined, they can give. It's not an issue. When joint auditors are appointed, there should be a mutual discussion, divide the audit work among themselves. The division of the work would usually be a terms of audit of identifiable units or specified area. In some cases, due to the nature of the business of the entity and the audit, such a division of a work may be not possible. In the circumstances, the division of the work may be refer to the items and liabilities of the income certain areas of working. Owing to the importance and owing to the nature of the work involved, would often not divided and would be covered in the all joint auditors. Documentation. Joint auditors should discuss and document the nature, timing, and extent of audit procedure for common and specific allocated area and audit to be performed for each of the joint auditors, and the same shall be communicated with the charge governance. After identifying an allocation of work among the joint auditors, the work allocation document should be signed all the joint auditors, and same should be communicate to charge with governance and entity. Responsibility of coordination among joint auditors. In respect of the audit work divided among the joint auditors, each joint auditor shall be responsible only for the work allocated to such joint auditors, including the proper execution or audit performance. All the joint auditors shall be jointly and severally responsible for audit work which is not divided among the joint auditors and carried out the joint auditors. Discussion taken by any of the joint auditors under the audit planning is respect of the common audit area concerning the nature, timing, extent of the audit procedures to be performed by each of the joint auditors. The matters which is brought to the notice of the joint auditors by any one of them or one which is an agreement among the joint auditors, examining the financial statement of the entity, complying with the requirement of the relevant structure. Representation disclosure of the financial statements is required by the principal financial reporting framework, ensuring that the auditor report complies with the requirement of a relevant statute, applicable standard on auditing, and other relevant pronouncement of ICA. Relation on other joint auditors, i.e., joint auditors entitled to assume that other joint auditors have carried out their part of their audit work and the work has been actually been performed in accordance with the standard of auditing issued by the Insurance Chartered Accountant in India. It is not necessary for the joint auditor to review the work performed by other joint auditors to perform any test in order to ascertain whether the work has been actually been performed in such manner. Other work auditors need to not check their work they will do because they are responsible for their work. Other joint auditors have board said joint auditors notice and departure from the applicable financial reporting framework or significant observations that are relevant to the responsible notice in the course of audit. Whether the financial statements or division of branch or audit of one joint auditor, other joint auditors are entitled to proceed on the basis of the financial statement, complying with the legal and regulatory requirement present in the true and fair value, state the regulatory requirement present and true and fair value, state of the affairs and not the result of operation and division and branch and concern. Audit conclusion reporting. The joint auditors are required to issue a common audit report. However, there the joint auditors are in disagreement with the regarding the opinion or any other matter to the covered in the audit report. They shall express an opinion in the separate report. The joint auditors are not bound to view of the majority of the joint auditors regarding the opinion or the matter to be covered in the auditor report shall express an opinion formed by the said joint auditor in a separate audit report in the case of disagreement. The case of circumstances, the auditor report, including joint auditors, shall make reference to the separate audit report issued by the joint auditor. Further, separate audit report shall also reference to the audit report issued by joint auditors. Such reference shall be made under the matter, other matter para, or the revised SI 706. Emphasis of matter para or other matter para as an independent auditor reports. During the course of audit, CIT, the financial year 14-15, it is noted that 2 lakhs of the employee contribution and 9.5 lakhs employee contribution towards the employee state insurance contribution has been accumulated in the books of account respective hands. Okay. However, it found that 4 lakhs only has been deposited in the BICC department during the 31st March. The finance manager informed the auditor due to the financial crunch, they have not deposited the money due but will deposit the amount overdue along with the interest and the financial portion improves. Amount on certain auditor. SA 250 auditors and consultation regarding to laws and regulation. So they are responsible of the company to deposit. They have not deposited. Whether they have considered as an current liability, good. If they consider current liability and they are saying we are ready to pay the payment, then good. So they are following the laws and regulation. They are not able to pay, but you can give in the notes of account, emphasis of matter para that this amount is mean outstanding. This amount has not been paid. It is outstanding with the employer. This amount is collected from the employee that is pending to deposit. I can mention that is more than enough. If the management is okay, then good. Complies with law and regulation reporting requirement. The statutory auditor, statutory provision of the company said all companies are required to submit the government dues on time, comply with the statutory requirement. All expenses due are required to be accounted correctly and dues to be paid by the government dues. Claim as a deduction on the income tax expenses. SA 250, consideration of law and regulation, the audit of financial statement. It is responsible of the management with oversight that those charged with governance to ensure that the entity's operation are to conduct in accordance with the provision of laws and regulation, include compliance with the provision of law and regulation, determine the reporting amount and disclosures in the entity's financial statement. The auditor is responsible for obtaining reasonable assurances that the financial statement takes an hold of free from material misstatement or whether caused by the fraud or error. It conducting an audit of financial statement, the auditor takes into account an applicable legal requirement framework. The auditor concludes that non-compliance with the material effect of the financial statement it has not been adequately reflected in the financial statement. Auditor shall express a qualified adverse opinion in financial statement. In the city has not paid the full amount ESIC, which is government dues, and contended that it will pay it with the interest when the financial portion improves. It is not acceptable reason. Auditor has to report separately in his auditor report and qualify his report.